Imagine an emergency hits. Your car breaks down, a medical bill arrives, and it costs just $1,000. For nearly 60% of Americans, that's enough to wipe them out completely. A 2023 Bankrate survey confirmed it. Most Americans have more month than money. Expenses tower over savings, and the gap is getting worse every single year. It wasn't always like this. In the 1970s, wages kept pace with the cost of living. Today, housing, food, and healthcare have skyrocketed, but paychecks, they barely moved. And here's the painful truth. Most people know they should save, but between rent, debt, and the rising cost of just existing, there's nothing left. So where do you even start? These aren't rare disasters. Car repairs, medical bills, appliance failures. Life throws at least one financial emergency at most families every single year. And without savings, each one is a crisis. Most people without savings turn to credit cards in emergencies. But that $1,000 car repair at 27% interest, if you only pay the minimum, you'll be paying it off for 3 years, and it costs you $400 more. This is how financial emergencies become long-term setbacks. One bad month leads to debt, which leads to interest, which leads to less money for savings, which leads to the next emergency hitting even harder. Inflation isn't abstract. When the price of eggs, gas, and rent goes up, the 60% who have no cushion feel it immediately. There's no buffer. Every price hike eats directly into their zero.
This isn't just a poor people problem. Gig workers, single parents, recent graduates, small business owners, financial fragility affects people across all income levels. Even six-figure earners can be one paycheck away from disaster.
Since 1979, productivity in America has risen over 60%. Wages? Up about 15%. The rest of the gains went to the top, leaving average workers running a race they were never meant to win. Housing is the biggest budget killer. In 1980, the average home cost 3 times the average income. Today, it's over 7 times. For millions, homeownership, the classic wealth builder, is completely out of reach. The average American student graduates with $37,000 in debt. That monthly payment doesn't just delay wealth building, it actively keeps millions from ever starting. The foundation is cracked before the house is even built. 1 in 4 Americans skips needed medical care because of cost. And for the ones who go, medical debt is the #1 cause of personal bankruptcy in the United States. Healthcare is a financial emergency all by itself.
The rise of gig work has traded stability for flexibility. 59 million Americans freelance or gig work, with no employer benefits, no sick days, no safety net. Income variability makes saving feel nearly impossible.
Scarcity does something to the brain. Research from Harvard and Princeton shows that financial stress literally reduces cognitive bandwidth, making smart long-term decisions harder when you need them most. Social media has made comparison constant. Lifestyle inflation is one of the most silent savings killers for the modern generation. Here's the uncomfortable truth. Most of us were never taught this. The financial literacy gap is a design flaw, not a personal failure. Every month you don't build a financial cushion, you're gambling. Not saving now means the next emergency, and there will be one, hits harder, costs more, and digs a deeper hole. Waiting has a price. But here's what's also true. This is fixable. Not easily, not overnight, but with a real system, real steps, and the right mindset, you can build genuine financial security. Let's start right now. The very first goal, before investing, before extra debt payments, is to save $1,000 as a starter emergency fund. This single buffer stops small problems from becoming credit card disasters. Not sure where to find $1,000? Start by selling items you don't use, cutting unused subscriptions, the average American wastes $133 per month on them, and picking up one extra income shift or gig. You can't fix what you can't see. Before building any plan, track every dollar for 30 days. Most people discover $200 to $400 in spending they didn't realize was happening. That's your savings fuel. The zero-based budget assigns every dollar a job before you spend it. Income minus expenses equals 0. Not because you're broke, but because every single dollar is working intentionally. Nothing leaks out. A simpler framework, the 50-30-20 rule. 50% of take-home pay goes to needs, 30 to wants, and 20 to savings and debt. It's flexible, easy to remember, and works at nearly any income level. The best savings hack is removing willpower from the equation entirely. Set up an automatic transfer to savings the moment your paycheck hits. If you never see it, you won't spend it. Automate and forget. Where you park your emergency fund matters. A traditional savings account might earn 0.01%. A high-yield savings account earns 4 to 5% right now. Same money, no extra effort, earning 400 times more interest. Subscription creep is real. Netflix, Hulu, gym, apps, delivery passes, cloud storage, they add up fast. The average American has 12 paid subscriptions. Cutting just 4 unused ones often frees $40 to $60 per month. Skip the coffee shaming. Yes, small savings add up, but cutting a $5 latte won't fix a $1,500 rent problem. Focus your energy on the big 3: housing, transportation, and food. These move the needle most. Housing typically eats 30% to 50% of income for struggling Americans. Getting this number down, a roommate, a smaller place, a cheaper area, can save $300 to $800 per month. No latte cut comes close to this. Transportation is the second biggest budget drain. Car payments, insurance, gas, and maintenance combine to cost most Americans over $1,000 monthly. Downsizing to a reliable used car or using public transit can free hundreds instantly. Americans spend an average of $3,000 per year eating out. Cooking at home most nights can save $200 to $300 monthly. Meal prep transforms food from a money leak into a budget victory. List all debts from smallest to largest. Attack the smallest aggressively. Each payoff frees more money for the next one. Once your $1,000 starter fund is set, attack debt with the snowball method. List all debts from smallest to largest. Pay minimums on all, but attack the smallest aggressively. Each payoff frees more money for the next one. Prefer math over motivation? The avalanche method targets your highest interest rate debt first, saving the most money overall. It's slower to feel wins, but can save thousands in interest. Both methods work. The best one is the one you'll actually stick to. Here's a trick most people never try. Call your credit card companies and ask for a lower interest rate. Studies show that 70% reduction on a $5,000 balance saves $300 in interest per year. Balance transfer cards offer 0% interest for 12 to 21 months. Moving high-interest debt here, not interest. Used strategically, this can accelerate debt payoff dramatically, but read the fine print. Once debts are managed, the next milestone is a full emergency fund. 3 to 6 months of living expenses. For most families, that's $6,000 to $15,000. This is your moat. It keeps financial chaos outside your walls. Your emergency fund should not be in stocks. Markets crash when you need money most. Keep it in a high-yield savings account, accessible within 1 to 2 days, earning real interest and completely separate from your regular spending account. Take your emergency fund further with sinking funds, separate savings buckets for predictable, irregular expenses, car repairs, medical bills, holiday gifts. When the expense hits, the money is already there. No drama, no debt. Sometimes budgeting alone isn't enough, especially when expenses are high and income is fixed. A side hustle earning even $200 to $500 per month can be the bridge that makes savings possible without sacrificing necessities. You probably already have income-generating skills. Writing, design, coding, tutoring, cooking, driving, handyman work, these are all freelanceable. The barrier isn't ability, it's just knowing that people will pay for what you already know how to do. One of the fastest ways to jumpstart an emergency fund, sell what you don't use. Most homes have $200 to $1,000 worth of unused items collecting dust. A weekend decluttering session can literally fund your entire starter emergency fund. Most people pay full price for bills without realizing they're negotiable. Internet, phone, insurance, even medical bills. Companies often have unadvertised rates. Calling and threatening to cancel is one of the highest paying hours you can work. Groceries are one of the most flexible expenses in any budget. Shopping with a list, using store brands, checking apps for deals, and avoiding hungry shopping can cut your food bill by 30% to 50%, often $100 or more per month. Impulse purchases are silent budget assassins. Implement the 24-hour rule. Before any non-essential purchase over $30, wait 1 full day. Research shows most impulse urges fade within 24 hours, and the money stays in your pocket. In the next 20 minutes, you could free up money. Cancel one streaming service you barely use. Pause a gym membership for 2 months. Call your internet provider for a lower rate. These 3 moves take 1 phone call and 2 clicks. For people who overspend, cash envelopes create physical limits. Allocate your budget categories in real cash. When the envelope is empty, that's it. The physical act of handing over cash makes spending feel real. Your credit score is literally worth tens of thousands of dollars. A great score gets you lower interest rates on mortgages, car loans, and credit cards. A poor score is a hidden tax you pay for years on every large purchase. Building credit comes down to 3 things: always paying on time, keeping your credit card balance under 30% of the limit, and keeping old accounts open. Do these consistently for 12 months and your score will meaningfully improve. One of the most underrated financial skills is the ability to say no. No to expensive social obligations, no to group purchases you can't afford, no to lifestyle upgrades that don't fit your current plan. Saying no now funds every yes in your future. Most people don't truly understand their own paycheck. The gap between gross pay and take-home pay surprises nearly everyone. Understanding every deduction, and whether each one is optimized, is the foundation of smart financial planning. A big tax refund feels like a windfall, but it's actually your own money you lent the government interest-free. Adjust your W withholding to get that money in your paycheck monthly, then automatically route it directly to savings.
Wait! That tree gives free money!
If your employer offers a 401k match and you're not contributing enough to get it, stop everything else first. Compound interest is the most powerful wealth-building force on the planet. Money earns returns, then those returns earn returns. A single $1,000 invested $600 in 30 years, without adding another dollar. Time beats money in investing. Starting 10 years earlier and then stopping can produce more wealth than starting late and never stopping, because compound interest needs time above all else. Every year you delay costs you more than you think. A Roth IRA is one of the best savings tools available. You contribute after-tax money, but all growth and withdrawals in retirement are completely tax-free. For anyone in a lower tax bracket now, a Roth IRA is almost always the right choice. You don't need to pick winning stocks to build wealth. Index funds automatically invest in hundreds of companies at once, with tiny fees. Over 15 to 20 years, they outperform most professional fund managers, while requiring almost zero effort. Don't try to time the market. Instead, invest the same amount every month no matter what, a strategy called dollar cost averaging. When prices drop, you automatically buy more. When they rise, you own more. Consistency beats cleverness every time. Can't invest much? Start with 1% of your income. On a $3,000 paycheck, that's $30 per month. Over 20 years at average market returns, that $30 per month becomes nearly $16,000. Insurance is the roof on your financial house. One catastrophic event, a serious illness, disability, house fire, or accident, can erase years of savings without it. The right insurance coverage transforms financial fragility into resilience. Going without health insurance is one of the riskiest financial decisions anyone can make. A single ER visit averages $2,800. A hospital stay can exceed $30,000. Health insurance turns a financial catastrophe into a manageable setback. If anyone depends on your income, you need life insurance. Term life insurance, covering 10 to 30 years, is surprisingly affordable to fellows in coverage for around $25 per month. This is one of the most important financial tools for families. 1 in 4 workers will experience a disability that prevents them from working before they retire. If your income stops, your financial plan collapses. Short and long-term disability insurance replaces 60% of income during these periods, and most people skip it entirely. Renter's insurance is possibly the most underused financial product in America. For $15 to $20 per month, it protects all your belongings from fire, theft, and water damage, plus personal liability. Most renters skip it. None of them should. Building financial security isn't a one-time event. Schedule a monthly money check-in, 30 minutes to review spending, adjust your budget, and track your progress. Consistency turns these habits from effort into automatic behavior. An emergency fund is only powerful if you protect it from non-emergencies. Job loss, medical crises, urgent car repair, unexpected home damage, these qualify. Sales, vacations, and upgrades don't. Guard your fund like the financial lifeline it is. If you have to use your emergency fund, that's exactly what it's for. Don't feel guilty. Do make it priority number 1 to rebuild it immediately. Temporarily pause extra debt payments and discretionary spending until the fund is whole again. Financial security has a natural order. Emergency fund first, it protects everything else. Then debt, then insurance, then retirement savings, then investment growth. Skipping levels means building on sand. The order matters enormously. Money is the leading cause of conflict in relationships. Having regular, structured financial conversations, not arguments, with your partner creates alignment. Set shared goals, assign financial roles, and review the budget together monthly. Financial literacy starts early. Kids who learn to divide money into spend, save, and give categories develop money habits that last a lifetime. Teaching children the basics isn't just parenting, it's breaking the generational cycle of financial stress. Payday loans are financial quicksand. The average payday loan carries an APR of 400%. Borrowers typically can't repay in time, roll it over, and end up 2 to 3 times what they borrowed. They are the most predatory financial product in existence. Financial growth happens faster in community. Online groups, local workshops, trusted friends who talk about money openly, accountability and shared knowledge are multipliers. The most financially successful people share ideas freely. Lifestyle inflation is the silent emergency fund killer. When income rises, spending rises to match, and the savings rate never improves. Commit to banking at least 50% of every raise and bonus before lifestyle catches up. Wealth isn't what you spend, it's what you keep. Net worth, assets minus liabilities, is the only real financial scoreboard. Many high earners have low net worth, many modest earners have high net worth. Track and grow the number that actually matters. The FIRE movement. Save 50% or more, invest aggressively, and retire early. It's extreme, but it can transform your financial future. Financial freedom isn't about yachts and mansions. It's about choices. The choice to leave a toxic job, to take time for family, to say yes to what matters and no to what doesn't. Your financial safety net has more layers than you think. Your personal emergency fund, trusted family, community food banks and assistance programs, government unemployment and SNAP benefits. Knowing what exists makes using it a strategy, not a shame. If you're in debt, know your rights. The Fair Debt Collection Practices Act protects you. Collectors cannot harass, lie, or threaten. You can request verification in writing. You can demand they stop contacting you. Knowledge is a powerful shield. You don't have to pay for financial help. Nonprofit credit counseling agencies offer free debt management advice. HUD-approved housing counselors are free. Many employers offer free financial coaching through EAPs. Quality guidance doesn't have to cost you anything. Don't wait for a big win to feel good about your financial progress. Celebrate every milestone. The first $50 saved, the first debt paid off, the first month you stuck to budget. Small wins build momentum, and momentum builds everything else. Being poor is expensive. Higher insurance rates, inability to buy in bulk, check cashing fees, subprime interest rates. The poverty tax costs low-income Americans an estimated 12 people. Acknowledging systemic inequality isn't an excuse, it's accurate. Inherited wealth, access to quality education, family financial knowledge, and social networks all create massive advantages. We can work hard while also being honest that the starting lines are different. Growing up in financial chaos leaves marks. Financial trauma is a real psychological pattern. Recognizing it is the first step. Therapy and support can help rewire these patterns. The top 1% in America now holds more wealth than the entire bottom 50% combined. And that gap has widened every decade since 1980. Individual action matters, but so does civic engagement, policy change, and demanding systems that work for everyone. Saving is necessary, but for real wealth building, you also need income growth, investing, and ideally multiple income sources. Cutting expenses has limits. There's only so much to cut. Growing income has no ceiling. Both sides of the equation matter. Investing in your career is often the highest return move you can make. A certification, a relevant course, a professional network, these can increase income thousands per year. That additional income, invested consistently, becomes the foundation of genuine wealth. Failing to negotiate your salary is one of the most expensive financial mistakes most people make. Studies show 70% of employers expect negotiation, but fewer than 40% of workers actually do it. One conversation can add hundreds of thousands of dollars over a career. For 1.1 million Americans earning the federal minimum wage of $7.25 per hour, saving is a mathematical impossibility, not a willpower problem. Assets are things that pay you. A spare room, a skill you can package into a course, a website, dividend stocks. These create income streams that don't regale your $1 to $200 per month changes everything. House hacking, buying a multi-unit property, living in one unit, and renting the others, is how many people with average incomes build real wealth. Your tenant essentially pays your mortgage, and you build equity in an asset while keeping housing costs low. 10 years from today, your financial life can look completely different. Not because of luck. Year build the choice stint. Year 2, kill the debt. Year 5, grow wealth. Year 10, financial security. Before any strategy works, the mindset has to change. I'm bad with money is a story, not a fact. The people who build security aren't smarter or luckier. They made a decision, built systems, and stayed consistent. Stop saving what's left after expenses. Start paying yourself first. When your paycheck arrives, move savings to a separate account immediately, before bills, before groceries, before anything. This single habit shifts your entire financial trajectory. Want to go deeper? 5 books changed how millions think about money. The Total Money Makeover by Dave Ramsey, I Will Teach You to Be Rich by Morgan Housel, Your Money or Your Life by Vicki Robin, and The Millionaire Next Door. You don't need to pay for financial education. Khan Academy has free personal finance courses. The CFPB website has free guides for every financial situation. Local libraries host free workshops. The tools are available to you right now. The right tools make everything easier. A budgeting app like YNAB for tracking, an automated savings app like Capital for painless saving, a low-cost brokerage like Fidelity for investing, and a net worth tracker to watch it all come together. Financial desperation creates vulnerability to scams. Guaranteed returns, MLM income promises, investment schemes with no risk. These target people who want hope. Real wealth building is boring, slow, and consistent. Anyone promising otherwise is taking your money. Some financial situations genuinely need a professional. For taxes, a CPA. For estate planning, an attorney. For investment advice, only use a fiduciary financial advisor. They're legally required to act in your interest, not earn commissions. Fee-only advisors are the gold standard. Financial stress is not contained to your wallet. It damages your health, your relationships, your sleep, your focus, and your career performance. Building financial security isn't just about money. It's about reclaiming your mental and physical well-being. Personal finance happens inside a policy environment. Minimum wage laws, healthcare access, childcare costs, housing policy, these shape what's possible for families at every income level. Voting and civic engagement are financial decisions too. You will slip up, you'll overspend 1 month, miss a savings deposit, break the budget. That's not failure. The single simple for finding back on track. Consistent progress, even imperfect, beats perfect paralysis every single time. Imagine this. Your car breaks down. You open your emergency fund, pay the repair, and go about your week. No panic, no metcalm is exactly what you're building toward. It's completely achievable. Every financial transformation has a turning point, a moment when someone decided enough is enough. Maybe this is yours, right now, today, not Monday, not next month. Today you start tracking. Today you build the first $50. Today the path changes. Here's your 6-step launch plan. 1. Track every dollar for 30 days. 2. Open a high-yield savings account today. 3. Save $1,000 as fast as possible. 4. List every debt. 5. Cut 2 subscriptions this week. 6. Get your full employer 401k match. Start today. Plan in 3 horizons. Your 1-year goal is the $1,000 starter fund and serious debt reduction. Your 3-year goal is being consumer debt-free and invested. Your 5-year goal is a full emergency fund and positive net worth. Put dates on these goals. Dates make them real. Your current financial situation is not your identity. It is a set of circumstances, many influenced by things outside your control, that can be changed with the right information and consistent action. You are not your debt. You are not your income. You are what you decide to do next. Every step you take toward financial security doesn't just help you. It breaks a cycle. The habits you build, the knowledge you gain, the cushion you create, these become tools you pass to your community. Financial security compounds across generations. Every step you take toward financial security doesn't just help you. It breaks a cycle. The habits you build, the knowledge you gain, the cushion you create, these become tools you pass to your community. Financial security compounds across generations. Individual financial security is powerful, but collective financial resilience, communities where members support each other, share knowledge, and pool resources during crises, is more powerful still. You are more financially secure when your neighbors are too. Redefine what wealth means to you. For most people, it isn't yachts. It's freedom from financial fear. It's sleeping through the night. It's choosing work you find meaningful. It's having options. That kind of wealth is achievable on almost any income if you build deliberately. Let's be clear about the real culprits. It's not brunch or Netflix causing the crisis. It's 40 years of stagnant wages, skyrocketing housing, predatory astronomical healthcare, and a financial system designed without working people in mind. Personal action matters, and so does accountability. Sustainable financial habits are built on values, not willpower. Before building a budget, clarify what money is actually for in your life. Security, freedom, family, adventure. When spending aligns with your real values, the plan sticks because it means something. The hardest part is starting, not because it's complicated, but because financial chaos is familiar and change feels risky. But the first step is tiny. Open a high-yield savings account. Transfer $25 this week. That's it. That's the entire first step. One of the most powerful things you can do once you start building financial stability is teach someone else. Share what you're learning. Pass on the tools. The communities that thrive financially are the ones where knowledge flows freely and no one is left behind. What you see in media is not the average American's financial reality. It's the curated highlight reel of the top few percent. Comparing your behind the scenes to everyone else's highlight reel is a guaranteed path to bad financial decisions. The goal isn't to be rich, it's to be resilient. Resilient means a job loss doesn't destroy you, a medical bill doesn't derail you, an economic downturn doesn't take everything. Financial security is a fortress, and you're building it brick by brick. Financial transformation is not a moment, it's a decade. Month by month, year by year, small decisions compound into massive outcomes. The path is long, occasionally discouraging, and absolutely worth it. Keep walking. When financial fear goes away, everything changes. You make career decisions based on opportunity, not desperation. Relationship decisions based on love, not economics. Financial security changes your entire life. You are not powerless. Not against the system, not against your circumstances, not against your past. Every single positive action, the power to protect yourself, the power to build something lasting. Monday never comes. It becomes next month, next year. Today is the only starting line. You don't need perfect conditions, just one small action and the willingness to continue. You started this video as a statistic. You'll finish it as someone with a plan. 1 in 3 Americans will never build a financial cushion. You now know why, and invest in your future, and then help someone else do the same. If this helped you, hit subscribe. We break down money, life, and how to build real financial security, one video at a time. The bell means you never miss one. And if even one thing in this video hit home, smash that like button. It tells the algorithm this content matters and helps more people find it who actually need it.